Yo, what's good, guys? Pips of Africa is back in the building. So it's your boy Pips here. In this video, I'm gonna be talking about the EURCAD. EURCAD has been pushing higher and higher according to the monthly time frame. Even though the structure is not that clear to me, but it is clear that on the current trend, what I see the bullish market. As you can see, my trend lines here. We had the high, we had the low, the high, the low, the high, the low, the high. With this high here, this high, it failed to push above this high. That was the sign of the market that was ready to go down. But now I want you to take attention, or to pay attention below this monthly low. This monthly low, we need to mark, we need to put a trend line below this monthly low, and then that's the only thing that we need to focus at. Remember, I said to you, you need to check. There are three things to focus on. The first thing, the market structure. The second thing is what is the liquidity zone. The third thing is what is the entry point. So those are the things that you need to focus on. Remember, I said the market structure is the first thing. The second thing, liquidity zone. The third thing is, so yeah, those are the things you need to pay attention at. But since the liquidity was cleared here below this low, since the liquidity was cleared here, there's only one thing to focus on right now. You need to focus on the weekly time frame, on the next smaller time frame, following the monthly time frame. So that is the weekly time frame. And if you can check above here, these are the relative equal highs. Relative equal highs. So let me try to mark those relative equal highs so that you can expect the market to push up until these equal highs, right? This is just a relative equal highs. All right, so now you can see that below this monthly low, or this weekly low, there was an order block underneath this low, so which was confirming to us that the price will indeed go below this low right here. As you can see, that this is the order block. The price went higher, more aggressively than last time. The price went higher from this order block. It started by creating an order block, then it went higher aggressively. And then now we need to mark the order block that is below the weekly low. This order block is below the weekly low, so we need to mark it up like this so that you can expect the market to push to the downside and mitigate this weekly order block. After the mitigation, we need to expect the market to push really higher. So the mitigation has already happened. So let us check what else we need to focus on. All right, so here there was this order block which is still yet to be mitigated. It was not yet mitigated, but we have to expect the price to return back to this order block. It might come back here, and it might never come back to this order block, because the other order block was already got mitigated. So let me try to mark it up for the sake of the following time frames. All right, so now after I'm done with this one, remember, don't forget our 4 key points. The first point is what is the market structure. The second point is what is the liquidity zone. The third point is what is the entry point. Those are the points that you need to focus on. Let me try to push, let me try to see what happened according to this order block. You can clearly see that the market, it pretended as if it wants to go higher, and then it went back down, right, taking this low once again. Let me see if I will find the Wyckoff schematic inside this order block. I might find the Wyckoff schematic around these zones. Remember that this is the order block, this is the order block, this is the weekly order block. Let me try to write it down so that you won't forget that this one is a weekly order block. Weekly order block. I'm going to like WOP, weekly order block. Weekly order block. All right, so now we've already seen that the market mitigated this order block already, this weekly order block. So we need to further go down to the smaller time frame than the weekly time frame. Remember that I said to you, this one is just a relative equal highs. After the market is done mitigating the weekly order block, it will push higher to grab liquidity above those relative equal highs. All right, let me just go to the daily time frame and see what is happening there. But I smell something like, you see, guys, I told you that there's something happening. There's something going on this EURCAD. Let me try to show you the what the Wyckoff schematic. Correct. So the Wyckoff schematic is perfect in this case, guys. The Wyckoff schematic is very perfect in this case. You can clearly see that here this one uh, is the PS preliminary support. The preliminary support is there. The preliminary support is there. The second thing that I see there is the the selling climax, SC. It is also labeled as SC. That's a selling climax. After the selling climax, we're going to see it's a vice versa, guys. On the distribution, we need to see the bias climax. But on the accumulation, we need to see the selling climax. This is just a Wyckoff. This is just the extra confirmation, which is telling us that this market is indeed trying to buy. This market is indeed doing what? Trying to buy. Okay, all right. Then we need to further go to the following step. All right. So after getting the selling climax, the first thing is the preliminary support. The second thing, the selling climax. After selling climax, we're going to get what? The AR, the automatic rally. The automatic rally to the upside. Okay, so the rally to the upside is occurring at this point, at the automatic rally. You need to pay attention to these things, guys, because for you to be profitable, you need to know everything in this market. For you to stay away from manipulation, to be safe from the manipulation. So after the selling climax, we have the automatic rally. So after that, the automatic rally, which is also known as AR, we need to see the secondary test. This is the secondary test that we need to see. Secondary test that we need to see after the automatic rally. So secondary test, it occurred after the automatic rally. So the first thing that happened is the preliminary support, which is aka the PS, and then after that one we had the selling climax, aka the SC, and then after the SC we had what? The automatic rally. After the automatic rally we had what? We're having what? The secondary test. After the secondary test we have what? Have the sign of strength, which is also known as the SOS, the sign of strength, also known as the source. This is the source sign of strength. All right. So after that one, we expected to get what? To get the secondary test in phase B, but in most cases we are no longer getting the secondary test in phase B. We only get the spring. The spring has just occurred. This is the accumulation, guys. Remember, we don't have we have the spring in this case. The spring has just occurred, but in the form of the distribution, we have what? We have the UTED. UTED is being replaced on the distribution, but in the accumulation, we have the spring. All right. So here I see the spring. The spring is right here. So we have the spring right here. All right, guys. So somewhere here we have a spring. So we are having a spring. So this confirms to us that the market is indeed ready to push it out to the upside. I've been waiting for this moment. Today, it has just arrived. So now, for what we have to do is to just pull the trigger, and expect the market to move to your direction. All right. So now let me try to label the spring. The spring has just occurred. So we need to actually label the spring. The spring is here. The spring is here. Remember, guys, we have a spring. The first thing that we had. This is just the final part, good people. This is the final part. The first part was the PS, aka the preliminary support. It was followed by the selling climax, aka the SC. After SC, the automatic rally. After automatic rally, we got what? The secondary test. After that, we got the source, aka the sign of strength. After that one, we had what? A creek. I forgot to mention to you that there is also a creek, but it doesn't happen. It doesn't happen most of the time, or a lot of the time. So it doesn't happen every time, that one. So this one is just a creek, and then I'm expecting the market to push a little bit higher, and then it has to come back to this order block which was formed on the daily time frame. This one is a spring. The spring has to take whatever liquidity that was resting below. Remember that, good people, yeah, here the retail traders, they threw a line like this one. They threw a line like this one from the SC joining to the the secondary test. They thought that the market will start by here and push to the upside, but the market didn't do that. We don't trade like retail traders. We trade together with the banks. We trade together with the big banks, big institution, and then government. So we trade along with them. We don't trade against the banks and big institution. So we need to go together with the banks, right? So we need to wait until banks grab liquidity. After they grab liquidity, you need to enter the market. You need to pull the trigger and then wait until the market gives what is yours. All right. So this is the spring. It is now confirmed that this one is indeed a spring. So let me try to delete the weekly point of interest and then focus on the daily point of interest. All right. From here up to this low. Alright, so now let me give you a clear direction on how to take this trade. Let me repeat that. Let me just give you a clear direction on how to actually trade this market. Alright, so you need to wait until the market comes back here. But let me give you something very, very powerful. You're going to love this channel, guys. That is the main aim of me doing these videos. Because I didn't want to keep this information to myself. I wanted to make everyone profitable free of charge. Just by watching my videos, we can become profitable. It is what it is. So guys, now let me try to show you the magic of this Fibonacci tool of mine. Alright, so now I'm going to give you the settings of this Fibonacci. So from you see I applied the Fibonacci from the low up to the high of an order block, up to the highest point of an order block, right? From the lowest point of an order block up to the highest point of an order block, from the low to the high of an order block. All right, so you need to mark from the 61.8 to the till the 79%, 61.8% till 79%. That's how you have to mark up your zone, your points of interest using the Fibonacci tool. I'm going to give you the settings. You need to, what you have to do, you need to screenshot this thing. These are the settings. Let me try to move slowly. Right? These are the settings. You have to screenshot these things. You have to screenshot these things. Alright. So these are the settings of my Fibonacci. So let me try to get rid of the Fibonacci. So remember that I only focused on the three percentages. The first one is the 61.8%. The second one is the 79%, 70.6 or 0.5, something like that. I forgot the other one. But between the 61.8 and the 79%, I buy around those zones. I pull my trigger as long as the market is still inside those percentages or points of interest. All right. So now my entry is gonna be looking like this. My entry is gonna be looking like this, right? It is not gonna. I'm not gonna pull a trigger above here. All right. I want to get a reasonable stop loss. I'm still gonna go down to smaller time frames to show you something very, very special, right? So this is how my entry will look like. But remember that I'm not gonna take entries based on a daily time frame. Let me try to get rid of this one and go down to, and further go down to 4-hour time frame for me to get a reasonable stop loss. Right? There's nothing on the 4-hour time frame. Let me further go down to hourly time frame. Maybe I can get something very interesting there. Can see something that is really interesting on the hourly time frame. All right. So remember on my last video, there's something that I said to you. I told you that when you want to trade this market, you need to first analyze and see where is the final lower low and where is the final lower high. This one was our final lower high, and this one was our final lower low. This was our final low. What do we see below here? We see the imbalance. I can go ahead and mark up the imbalance. After that, I will mark this the last down candle before the up move. This is what I'm going to go ahead and mark. After doing this, because you already see that here there was an order block which was already respected, let me go down to 15-minute time frame and see what is happening there. Right, there is this order block right here. There is this order block which was never mitigated, right? So let me go to the 3-hour time frame. I might find something interesting, like here. Like here, you see, this happened inside the daily time frame. The market started by grabbing liquidity below this one. It went up, it went back down, right? So somewhere here the market might come back to close this imbalance. Let me show you the imbalance that I see here. So this is the end of the video, guys. This is the end of this video. This is the imbalance. All right, the price only went the imbalance only it occurring when the price only went up and it didn't offset. So it has to offset or to go down in order for it to close this space here, or this gap, right, that is here, that is currently here. So we must expect the market pushing back down, and then we can see the market pushing up once again. Then we are free to apply the Fibonacci if you don't see anything inside these areas right here. Apply it like this, and then your 61.8, let me get rid of this one. Your 61.8 is right here. You go down to 79%, right? So there's an imbalance right here. So 61.8 is aligning with the imbalance. So I trust the 61.8. And then your stop loss must be below your 88%. So your stop loss will look like this. The 88% is this one. Let me try to get rid of this one, of the bigger one, of the bigger highlighted area. And then your entry will look like this. Right? So if you still want to refine an order block, you can still do that. You can still do that. Right? If you still want to refine an order block, you can do that. Okay, so let me go to 5-minute time frame. If there's something very, very interesting there. So here there's liquidity. The market was consolidating here. It didn't take liquidity. So the market can come back here, taking liquidity here, and then move to the upside. So thank you so much, guys. As you can see here, there's this liquidity here. The order block that is resting there. So thank you so much, guys. I'll see you on the following video. Stay blessed. Pips of Africa is signing out. Thank you so much. Make sure you subscribe, you like the video, and also share it. The link will be in the description below for those who want to join the Signal group or join in the mentorship group. So thank you so much, guys. Peace.